To keep these trends going, how important is it for you to have a new North American free trade agreement, including Canada?
Yeah, thank you for the question. And the first thing before I turn to the trade part of the question is that some people have also said, well, sure, the economy's strong, but that's a sugar high. But it's not a sugar high at all, because what's happened is that the capital spending boom that we promised would happen if we passed the tax cuts is underway. And the cool thing about capital spending is that people build factories. That's what capital spending is. And they do that in the first half of the year. It's up 10% since the beginning of the year. And then in the second half of the year, those factories start producing output, so you get more output. And so the idea that the trend might not continue, that it's a sugar high, is just inconsistent with the form that the growth is taking. And as for NAFTA, Ambassador Lighthizer and the whole team have been in negotiations with Canada. We continue to be hopeful that they'll sign on to the 21st century deal with Mexico, which is really a better deal for American workers, and they should sign on to that. And so I'll come over here and I'll go back to you. Yes, so thanks.
Hi, Denise with PBS NewsHour. I have a question about income inequality. Can you talk a little bit about whether or not you've seen income inequality shrink, and are you at all concerned about whether or not people that are just poor, not just people that are in the economy, but actual poor people that are living beyond the poverty line, below the poverty line, are they being improved by this economy?
Yeah, they certainly are. Certainly, think about it. All the new entrants that get a job, that they go from having zero wage to having a wage, but they won't necessarily show up in the wage statistics. Those people are better off. And there are a number of other ways that people are better off, too, because of the growth in the economy, but also because of policies that have given resources to families that are needy. At the CEA, we put out a different report over the summer on what's going on with poverty correctly measured. And then in the Stay Tuned department, there's important data coming out this week, which will help us look at how income inequality has changed over, not in this year, but over the previous year. My expectation is that that data will start to turn, and that this year we're going to see a decline in income inequality because blue-collar wages are starting to grow. And it's a final point, and it's a really important point that you bring up, and I want to emphasize it because I care so much about it. The fact is that we're at a historic moment because we're deep into a recovery. The unemployment rate is really low, and we've created a capital spending boom. And so normally what happens if you don't have a capital spending boom is that people start to bid up the wages for folks, but they're bidding them up because there's a shortage of labor. What's happening now is they're bidding up wages because people have better machines to work with and their productivity is going up. That means that the recovery can last longer, and that's really, really good for workers, especially at the low end. And so it's precisely at this moment in economic history, if you look at past economic booms, where income inequality has declined. And if we were to blow it and have a recession because of bad policy right now, then we'd lose an enormous opportunity on income inequality. And then I'll come right here. Yeah.
Also two.
And then I guess it's the last question.
Sorry, two quick ones. Sorry.
Is he allowed to? You tell me. Do you like this guy? Okay.
You said I prefer to give blame or credit to policies rather than individuals, but your trend charts start with his election, obviously, when he wasn't even president and didn't put any policies in place. So how do you decide when to start that, given that policies couldn't have been in place for months afterwards?
Yeah, so Robert Lucas, famous Chicago, who won the Nobel Prize at the University of Chicago, got the Nobel Prize for answering your question back in the early 70s. But the basic point is that America's businesses, especially, that their activity is forward-looking. And so if you want to model their investment today, then you have to understand the fact that they're forming expectations not just about this month, but about the next 5, 6, 7, 8, 9, 10 years. And so if you look at what happened the moment that President Trump was elected, both in equity markets and in sentiment surveys, is that people started to ratchet up their expectations for what would happen to the economy. Perhaps everybody except for Mrs. Clinton's supporters was starting to do that right after the election. And the fact is that those expectations turned out to be rational because the turnaround that they expected is something that we see, as you just saw in the data. Let me hand it back to Sarah now, but close by saying that anyone who wants to follow up and talk about the data, you can tell I kind of like to do that. So feel free to reach out through the press office and connect with me over at the CEA.